Good morning, everyone. Today, I will be presenting a detailed financial forecast for Amazon up to the year of 2030 and discuss strategic investments in stocks and bonds using Amazon.com Inc. and Pacific Northwest Ballet as examples. Our goal is to understand how these financial instruments can be utilized to foster growth and ensure stability in both for-profit and nonprofit organizations. So here is agenda of today. We will focus on understanding the critical roles of financial instruments and strategic investments in fostering organizational growth and stability using Amazon.com and PBNS case studies. For today's agenda, we will first of all look at financial forecasting for Amazon and then the importance of stocks, bonds, and investment. And next, we will look at the strategic recommendations based on equations and the calculations that we have. And we will reach out to conclusion and Q&A session. Let's get started. Let's start with Amazon's financial outlook. We begin by calculating the compound annual growth rate, or CAGR, which predicts the rate at which Amazon's revenue are expected to grow annually over the period from 2023 to 2030. For example, the compound annual growth rate is a measure used to determine the annual growth rate of an investment over a specific period of time. In the formula, the ending value refers to the final value of the investment. Beginning value refers to the initial value of the investment. And years represent the number of years over which the investment has grown. To calculate CAGR, you divide the ending value by the beginning value. Take the nth root, where n is the number of years, and then subtract 1 from the result. This gives you that average annual growth rate over the specific period. For Amazon, from 2021's revenue of $469.82 billion to 2023's revenue of $574.78 billion over 2 years. For future revenue projections, using the CAGR, we project future revenues by applying the CAGR iteratively starting from 2023's revenue. For example, the revenue of 2025 equals to the revenue of 2024 multiplied by 1 plus CAGR. So, in terms of Amazon, the operating income raised from $32.49 billion in 2024 to $59.49 billion in 2023, based on a steady operating margin of 5.11%. In terms of free cash flow calculations, we utilize the weighted average cost of capital, short for WACC, of 7.92% to discount future cash flows. And for an NPV net present value, Amazon is estimated at $227.14 billion with a future value by 2030 pegged at $387.26 billion. And for strategic financial moves, suggestions include refining investment strategies, optimizing capital expenditures, and enhancing debt management practice to align with the projected growth. Moving on to the roles of stocks, bonds, and other investments. For stocks, Amazon issues shares to raise capital, enhancing market visibility without increasing debt. The PE ratio is the equation that we use, which is to reflect investor expectations of growth, stands at 62.74. So for Amazon, facilitates capital raising without increasing debt and enhancing market visibility is the key. But for PNB, as a nonprofit, it should act as a sustainable funding source when donated, supports long-term investment. Next, bonds. Bonds are used to raise capital at a cost lower than equity, especially attractive when interest rates are low. The interest payments are tax deductible, preserving ownership structure. The equation we use is wk6, which is weighted average cost of capital. This formula is a measure of a company's cost of capital. It takes into account the proportion of equity and debt in the company's capital structure, as well as their respective costs, adjusted for tax in the case of debt. Cost of equity is the return required by equity investors, often estimated using capital asset pricing model, say APM, or other methods. The proportion of equity is the percentage of the company's financing that comes from equity. Cost of debt is the interest rate the company pays on its debt. Proportion of debt is the percentage of company's financing that comes from debt. And the tax rate is corporate tax rate, which is used to adjust the cost of debt for tax benefits. And use example of Amazon. The WACC is 8.52% times 96.25% plus the sum of 4.73% times 3.75% times 1 minus 21%, which is 7.92%. So for Amazon, strategic tools for capital at cost lower than equity, and interest is tax deductible, preserving ownership structure. But for PNB, need to issue tax-exempt municipal bonds for financing capital projects affordably. Investment, last but not the least. Investments in complementary business or new technologies are crucial. For example, Amazon's acquisition of Whole Foods highlights strategic diversification, crucial for maintaining competitive advantage. Pathways to leverage financial instruments. First of all, refining investment strategies. Allocate more resources to high-growth areas such as AI and international markets. They need to focus on high-growth sectors like AI technology and global e-commerce expansion, and prioritize R&D to sustain innovation and competitive advantage. Second, optimizing capital expenditures. Prioritize investments in technology and infrastructure to support sustained growth. They need to streamline operations to reduce costs and maximize ROI from new projects, and invest in sustainable and scalable infrastructures, particularly in emerging markets. Third, debt management. Utilize favorable market conditions to refinance high-cost debts, reducing WACC and improving cash flows. For risk management enhancement, they need to strengthen internal controls and diversify income streams to mitigate financial risk, and develop robust financial reporting and transparency to bolster investor confidence. In conclusion, Amazon's strategic use of financial instruments like stocks and bonds, coupled with wise investment and capital management decisions, will be critical in navigating the financial challenges and opportunities up to 2030. The same principles apply to nonprofit organizations like PNB, which strategic bond issues and judicious investments stand long-term financial health. It is imperative that we implement the strategies to ensure Amazon's long-term success and stability in a rapidly evolving global market. Now, I'm happy to answer any questions.